Good morning, traders. This is Frank Cholly with RJO Futures in Chicago, coming to you on Thursday morning, November 15th, with your grain market morning commentary. Currently, we have corn trading 2 to 3 cents lower, soybeans about 3 to 5 cents lower, and wheat's trading somewhere between 3 and 4 cents better. In the outside markets, we have gold down about $20 or $22. The S&Ps are unchanged to a little lower, but the S&Ps closed below a key level of support yesterday. And yeah, I'm here to talk about the grain markets, but I'm concerned with the weakness in the outside markets. S&Ps have been bouncing off that 200-day moving average, which is somewhere around 1369, 1370 level. And we closed way below that. So I feel like there may be a second leg down in the equity markets, and that could weigh on all commodities, and grains would get dragged down with that. Now, originally the grain market sell-off started, like I said earlier this week in other commentary, with the latest USDA report on Friday. We had a little bit of bearish news there, and technical sellers, just took it down to levels below $14 in the soybeans and close to $7 in the corn. And we're going to need some buying by these funds to get us back to levels above 1465 in the beans, or back to 750 in the corn. We're not going to get there unless these fund buyers come back into the market and show some interest on the long side. On the other hand, again, what I'm really concerned with, though, is that this outside market weakness just continues, to pressure the grains lower, and we see a continuation of this fund liquidation. Now, right now, it looks like the market may be willing to, pause and consolidate for a little bit. Usually after a big move down like this, a big move down, big move up, it doesn't matter. Markets tend to consolidate a little bit, take a pause, try and evaluate the new data and see if it warrants a continuation of that big move or a correction. I would think that at some point, again, if outside markets don't take everything lower, that these grain markets will start to find some buyer support, will come in, and the market will start to, claw its way back to levels that are more acceptable than what we have now. Again, you have to remember, fundamentally, we still have these tight supplies. The demand hasn't gone away, especially in the soybeans, but we're starting to see a little pickup in demand for the corn, and eventually we'll see a pickup in demand for wheat. Also, as global supplies become tighter, we'll see that demand shift from, a lot of the wheat has been coming out of the Black Sea region and other parts of Europe. Eventually, they'll come to the U.S. because those supplies have gotten too tight. The prices come up. We've talked about this before. As the spread between, foreign grains and U.S. grains start to narrow, we'll see demand shift to our end. So we're not the only place in the world to buy it, but eventually those other areas start to run tight, and they'll shift to the U.S. where grains cost a little bit more. So we're starting to see a little bit of that, I think, in the corn right now. Demand is starting to pick up on this pullback, and again, that's what it's going to take to move these prices up. For the time being, we're probably going to do a little bit of sideways, a little bit of consolidation, wait for some direction. So that's all I have time for now. I'd like the opportunity to talk to you. Please feel free to give me a call, 800-826-4124. And as always, remember that trading commodity futures does involve substantial risk of loss and is not suitable for everyone. Thank you.